credit important? So credit is very important, especially nowadays as far as employment goes. Hello, my name is Chelsea with Chelsea's Credit Repair. I am a board certified credit repair specialist located here in the state of Florida, and I am ready to help you get to where you need to be credit wise. So just let me know how I can help you today. And I came to you today to talk to you just for a few minutes about credit and why is credit important. So credit is very important, especially nowadays as far as employment goes, getting approved for credit cards, car loans, mortgage loans, anything really nowadays is based off your credit. And a lot of people tell me, well, Chelsea, I don't need credit repair. Okay, guess what? I pay all my bills on time. Why would I need credit repair? And one thing I always like to mention or tell them is paying your bills on time is only 35% of your score. So you could pay bills on time for your whole entire life and still be missing 65% of your points. So if you're just paying your bills on time, let's say you pay your electric bill on time and your car bill on time, and those are the only, and your phone bill on time, and those are the only bills you have to pay. Well, your phone bill and your car bill are the only ones that are going to be reporting to your credit report. And those are both installment loans. You need a mortgage loan reporting, you need a revolving loan, and you need an open-end revolving account on your report also. Now you ask me, what's the difference? What is a revolving account or an installment account or an open-end account? Okay, so a revolving account is like a credit card. Any type of credit card. And a lot of people say, well, hey, let me go max out my credit cards and I'll have great credit because I'll pay the minimum payment each month. Wrong. Do not go over 2 to 7% of your overall usage. Now, a lot of people say, well, I've heard that you go up to 30, or you need to max it out and then you can use, making your monthly payments, and that's the best way. Did you know 30% of your score is your usage? Once you go too high on your usage, then you're knocking points off of your score. So I always recommend for my clients, stay between 2 and 7% of your usage. A lot of people say, hey, let me zero out my credit card. That way I have no payment to make, 1, and 2, I'm not over my usage. Well, unfortunately, that's not how it works either, because the credit bureaus and the credit card companies want to see that you're using that card. Want to see that you're able to be responsible for that card. So they say stay under 30%. Well, I recommend staying between 2 and 7%, because I have noticed on many clients' reports that once they go over 10%, they lose some points, and once they get up closer to 30, they lose a lot more. So staying between 2 and 7 is you're still using it, whether you go to the gas station and buy a piece of gum once a month, or whether you go buy something small real quick once a month and then pay it off, and then long enough for it to report on your credit card. That works awesome. So that is as far as your revolving account goes. Now, an installment account is something you pay on monthly. So let's say a car loan. They give you a car loan and you pay the monthly bill. As long as you're paying on time, that is an installment account. Another one, self-lender. So if you're interested in self-lender, I call it like a savings account. So therefore, you pay them a certain amount each month, and you can decide what it is. I know one of their packages is you pay $48 for 12 months. They take a small fee out of it, which I think is about $10 to $15, and then at the end of that 12-month period, they actually send you that check back with all that money on it besides their small fee. And then therefore, not only have you had 12 months of reporting from an installment loan, but you also have a nice check to use at Christmas time or any other holidays, or just a little savings account. So that's another reason why that is very important. So if you would like information on that, you can always reach out to us. We can send you a link to help you get started. Now, an open-end account is a type of a credit card that, let's say you spend $20,000 on it this month. Well, when your bill's due, you pay the full balance, the full $20,000 balance. So you're not just paying the minimum payment, you have to pay off the full balance. So that's the difference between an open-end account and a regular credit card statement revolving account. So then you got a mortgage account, which is most people's goal to reach. So that's usually the last account they get after they get their credit fixed. Now another thing that matters is your credit age. So you don't want to go out and open up 20 different new accounts, because that's going to drop your credit age and hurt you even more. So you want to focus on maybe starting out getting you 1 or 2 new accounts and then letting the credit age. Do you have a family member that has great credit, or a friend or someone who would allow you to be an authorized user on their account on a certain credit card? Now they don't have to give you that actual credit card. They can just allow you to be an authorized user on it, and it reports onto your credit as in you have, like, if it's a high limit credit card or it's a really old one, like they've had open since 1999 or even before or less. Either way, that'll help build your age once it reports on your credit report. Now another thing you want to work about is inquiries. You don't want to go open a bunch of inquiries, because inquiries stay on your credit report for 25 months. So that's the thing, you don't want to get a whole bunch of inquiries, because then you will start getting denied for things because of too many inquiries. So you don't want to go applying and applying and applying. And if you're getting denied after 1 or 2 accounts, I would stop applying, review your credit profile, and see what it is that's stopping you from getting approved. Do you have a bunch of collections, charge-offs, unpaid bills, high interest rates, or high usage rates on your credit cards, not paying your bills on time? Figure that out and fix it before you go apply for 500 other different things, because it's just going to keep hurting you. Inquiries usually take 2 to 8 points off your score per inquiry. So that's very important not to apply for a bunch of accounts. So that is it for me today. I just wanted to jump on and let you guys know a little bit about credit and why it's important, because I would hate for you to go apply for your job you've been dying to have and you're all qualified, but then they pull your credit and they see that you got really bad credit, and they're gonna be like, well, this account or this person is great, she's got all the qualification, or he's got all the qualification, but his credit's not great. He don't pay his bills on time, and this, so that makes him not look as if he or she is not responsible. So therefore, that throws, that could hinder you from getting a job. It could hinder you from getting your house or any other things. So I always want to say, make sure your credit's in the right place. Make sure you're where you want to be before you go applying for all different types of things. And I hope everybody has a wonderful day, and I'll see you soon. If you would like more information about credit repair, please make sure you follow our Facebook and our Instagram. I did put the link down below in the description box, and make sure that you subscribe to our channel so that way you can see any updates and videos in the future.